How would you like to make your first million? And today we have as a guest Brandon joining from Washington. And Brandon is a former marketing agency executive who transitioned into entrepreneurship after scaling multiple multi-million dollars operations from the inside. Today, he runs a Capital Growth Partners, a consultancy firm focusing helping small business owners fix what's broken, rebuild smart, and scale profitability. So, Brando, this is right in your backyard. What are the 5 steps to go from 0 to 1 million?
Welcome to Unstoppable Podcast with Harry Sardinas, inspiring conversations with influential millionaires, investors, thought leaders, entrepreneurs who are making a massive difference with their innovative products and services, and sharing the challenges and wisdom of how they sold their first million.
Well, appreciate you having me on, first of all, Harry, and I'm excited to dive in. So, number one for me, Harry, is the people in your business, right? So, you've got to have the right people in the right spots to be effective. So, that's where we always start with whoever we're working with. Number two, I always like to look at systems and processes. Do business owners have systems and processes behind their business that actually help it move forward and ultimately make you money? Number three is always going to be the marketing behind your business. So, what exactly, are you utilizing to reach your customers? Is it Meta? Is it Instagram, Facebook, or are you doing more direct traditional styles of marketing? And then at the end of it, number four is always going to be the product. So we've got to make sure that your product and your offering is excellent, because all those other things don't matter if the product sucks, is what I always tell my clients. And so those are the four things. And then number five is probably the easiest, but most people miss it. It's execution. So people actually willing to do the work after you figure all those other steps out. You'd be surprised how many people think. They spend a lot of time on that, and then they end up not doing anything with it. So it's execution at the end of the day.
Yeah. Zero to going from 0 to 1, Brandon, to making the first million. There are some people that they are good in that journey, right? First time founders that they are very good in the 0 to 1, but there are other people, generally second time founders, that they are good at the second phase, which is 1 million to 10 million and growing and scaling. However, in order for you to be good at the second one, growing and scaling, you need to at least have been before in the 0 to 1. So what it means that there are less and less people, in my opinion, that can specialize in companies and take them from 1 to 10 to 10 to 100. Even in podcast, there was someone that showed up once that from an stopper that his expertise was from 100 million to 1 billion in mind. So this is what the thing that the thing that he was good at, right? So Brandon, what are the challenges that you find out with the entrepreneurs, especially the first-time founders? First-time founders, we always say in this podcast, they are product focused. They love the product. They're so in love with the product that they think that the product is so perfect that it's going to set by itself. And that's the nature when you first-time founders. However, second-time founders, they're different. Second-time founders, they realize that it's actually sales and marketing more important. If you have the sales and marketing strategy right, you will be able and you are able to communicate with the client to see if they like the product, how much they're willing to pay, and put in front of them with the right message. Actually, the product is not important because you know all this, you can develop the product really easy. So tell us about this transition that you have actually done, even from coming from marketing background. So tell us the biggest challenge that you face with first-time founders and how we close the gap.
Yeah, interestingly enough, I've experienced it in both ways. So I've come into a company before to help it scale after the founder founded the company. And then I've also started a company and then had to get out of my own way after about a year or two in the business. So we'll start with founders. Founders are really, really good at seeing around corners. To your point earlier, they're very, very at understanding a problem and then coming up with a fix to that problem. I think what we see a lot with founders is a lot of control. And particularly, in my opinion, I think that's really important in the first year or so of business. There's a lot of people out there that say that founders need to get out, they need to get out of their own way. I actually take the tone of, I think it's really important in the first 6 to 12 months for the owner or the founder to be very involved in the business because it's so important for you to leave your unreasonable hospitality and your real focus on ultimately coming up with an outcome for that customer. And only founders care as much about that as everyone else, right? And so that's what I see with founders. Now, usually I've found that around the year and a half mark, particularly around the 1 million to $2 million number, that's when things start to get tough for founders. The one thing I've seen this with my business partners before. I mentioned that I took over a marketing agency from a founder. I think that he was just a little bit bored. The big problems that come with scaling a company, like having all the people problems, having to talk to people every day and deal with their problems, because inevitably our employees,
Been there,
share with us, right?
been there, done
Yeah,
it. Yeah, I know what you're talking about.
right. So, that's where things start to get a little hairy. So I think you really need what I call, an executive that's in. It's probably usually a COO of some type, that can really come in and just manage the day to day. They can manage the marketing piece of things for you, right? Because once you have a really excellent product, it's all about getting it in front of the right people. Brand awareness is also really important, and all that stuff costs money and is really just boring for a lot of founders, I find. And anytime you talk to a founder about spending more money, they start to get a little clammy, right? Because that's their baby. And so I find if you remove the founder from some of the day-to-day meticulous, the operations, the human resources, to some extent, even the marketing, because some of that can get really in the weeds nowadays, you ultimately can then scale from that 2 to 10 to 50 million. I think you also have to get really intense about your financials. The one thing I've found a couple times in consulting our clients is that we've got a lot of clients that don't seem to understand their financials. And I mean that I've talked to clients before that thought they had a really healthy business, but cash flow wise, they weren't doing so well because they weren't collecting on the invoices that they were sending out, right? So there's all this back of the office stuff that frankly it matters a lot, but sometimes founders aren't so keened into because it's not sexy, it's not exciting for them, it bores them, right? So I think those are the two distinctions. And if you can find a game plan once you get big enough that works for you, that's how you'll scale.
Yeah, I agree with you 100%. 0 to 1, the founders that take the company from 0 to 1 million, like exactly you shared, 1 million, 2 million mark. The
Mhm.
problem, Brandon, is that after you reach this 2 million, you have to unlearn everything, and you need to
Yep.
learn a new things. And I think that we find the challenge because the founders, they only know what they know. They only know 0 to 1 million, 0 to 2 million, because they are facing this challenge. Okay, I have this product and I need to put it in front of the client, and if it's gonna buy it, and they literally depend on the client. If they don't have a client, they have no business, right? Whether they
Yeah.
when they reach, the 1 million, 2 million mark, product market fit, they technically don't depend the client anymore. I mean, somehow the people are buying the product. Now it's about getting market share. And it's exactly like you said, for them becomes boring. I can see that for you, it's very exciting to take
Right.
something from 2 million to 15 million. The other day in this podcast, Ken exit one company for 500 million. Can you believe that?
Oh, wow.
Interview
Phew.
from an interview that we did last week.
Yeah.
So and that's excited for him, right?
Yeah.
To scaling up. However, this is that required, and you describe as boring. Okay, I would say it's not boring. I also love it, but it's
Yeah.
completely different. You lose this this excitement and pivoting and try and error. You have one. Not gonna have that scaling up. You have other concepts that you have to learn, or that you need to learn how to implement. Exactly like you said: finance, leadership, market share, branding. And I get it, Brandon, that when you go to talk with the founder about all this, the guy is bored. He doesn't understand what you're trying to do. It costs a lot of money.
Yep.
And so at the same time, they are, because we have the challenge, they have that ego. Okay, we all have ego as an entrepreneur, because
Yeah.
otherwise we won't be entrepreneurs. They have that ego that they created the company, they know the direction, they know exactly what to do, but they really don't know. I said, no,
Right.
Mark Zuckerberg, you have Mark Zuckerberg, you have Jeff Bezos, you have the Google guys, and I don't know. This is just a few stories that people read that they think that they can become from 0 to 1 billion and stay away, but reality doesn't really work like that, right?
No, and in fact, I think you find a lot, and this is I've found with a lot of clients, is that once you get to a certain point, I think the best way to have that conversation, I mean, you definitely don't want to walk into the founder's office and say, hey, you're not focused on the right things, focus on this instead. That probably won't end very well, especially if that's your boss, right? But I tend to like to look at things as here's what the customers are saying. And everything, any company that I've entered, and helped scale, we've immediately engaged in some sort of customer feedback programming. And that times, that'll at least give them the information from the customers. It's not coming from me. It's not my opinion. It's the customer's opinion that matters, right? And if the customers want something different than what your vision is, that's a little different because you got to follow the market. You got to follow your customers in a lot of ways. So I find that helps with those types of conversations. But yeah, it's always a little bit hairy, but that's to your point on entrepreneurs for a reason. They're very risk. They're okay with risk. They're excited about new things, and I think a lot of times it's relieving for them to, you can jump in, help them scale something. Hopefully, they make a boatload of money, and then they can go do something else, right?
Knowing what I know now, Brandon, and after starting several business from 0 to 1, I think I really like more, to just acquire an existing business. If you see there are business there that there is nothing wrong with the business. It's just they just got all the children doesn't want to take the business. The owners are working in there the whole life and just they want to pass the baby to someone responsible that at least can keep the certain amount of growth so the employees have worked like this. And knowing what I know now, I think that it is way less risk to acquire a business and to grow it that actually start a new one from 0 to 1. Yet everyone wants to be a founder. Everyone to start the new company, the new business, without
Yeah.
having in consideration of the risk that takes, and nobody knows how long it will take you to make this product market fit. What I'm saying, Brandon, knowing what I know now, but because if you don't have any business and you never scale one, you will never be able to find the common factors. So which one, startups or existing business?
That's a
If
that's a
you need
tough
to
one
start
because
today, what would you prefer to do?
if I
Why
was gonna,
and
if
why
I
and
if
why?
I had, yeah, if I had all the knowledge I do now, and someone just said, "Hey, you got to start over," I would probably acquire a business, because you get all the skills from starting a business from scratch. So I do think it's important in a lot of cases to start a business from scratch because it really helps you to appreciate the grind that goes into that and some of the nuance with each different phase of the business. But I'll give you an example. One of my business ventures is gyms. I own fitness studios, and building one from the ground up and spending all that money to build one and just acquiring one from somebody that, maybe it's not doing so well and they need a little help, or even one that's doing great and just acquiring one that way, much less of a headache, right? And so I think my preference is probably to buy one. But, look, when you're starting something from scratch, you don't have a lot of cash. I mean, there's a lot of ways to buy businesses with no cash, but if you don't have any cash and you're looking to start something and you feel really strongly about it, I think go for it. I mean, you're going to learn a lot. I always joke with people that I mentor, but look, starting a business is like getting your own little MBA, right? You just don't have to spend $300,000 at Stanford to do it. So, there's benefits to starting a business from scratch just from the knowledge that you gain from it.
Yeah. So Brandon, regard Regarding business and scaling up, there isn't any particular sector that you say that is your favorite, or when it comes to business, as soon as the numbers are good for you, it's okay. If there is the health space, in the tech space, or real estate, or you actually um, can tell me, no, Harry, look, I like businesses and I'm good at scaling up all of them, but anything related with fitness, health, that is something that I'm feel more comfortable, because I hear that scaling up, if you also have experience in some specific, could make the journey easy, right?
100%. Yeah. I mean, I'll give the viewers kind of an idea of me is that I started my first business. So I was a partner in the media firm, and then that media firm merged with a company, and that was my exit. And my first business, just me, was a fitness studio. And so, the nice thing about getting back into the fitness studio space is that's what I had done for 10 years prior to joining the marketing firm. So I think if you know the business that you're getting into, it does, to your point, make it a lot easier. The sales process, the margins, ideally, how the expenses work, how the customers interact, and maybe kind of what they want at that point, right? So there's just less room for error than if you're entering a completely new sector that you know nothing about. Now, with that said, I think I look at investments far different than I look at businesses that I'm managing on my own. So where I'm looking at a lot of investment is certainly in the like tech and services sectors, because right now, at least in the US, there's all this tariff stuff going on, and who actually knows what's going to end up happening. And so from an investment standpoint, I like areas that don't have to worry about all that. There's always something here or there, and the stock market is trending pretty well right now. But so that's kind of my thought process from an investment standpoint. But as far as businesses that I get into and actually put my time into, it's always usually in like the fitness wellness space, because I'm very well versed in that. It's part of my life. It's part of my core values. I stay healthy. I work out every day. I feel comfortable selling it, and all know sales is probably the number one skill in any business that you need. And I feel really good about selling fitness to somebody. It's not a new pair of shoes. It's not a Rolex. It's fitness, and I know that that's going to person's life. So I get really excited about that. Versus, what's the new cool wearable that is on Tech Street now, right? So that's probably where I spend most of my personal time, but not all of my investment time.
Investment versus growing a company is completely different dynamic, because exactly what you described. Growing and scaling up a company, if you have a sector that you specialize, that you're comfortable selling, you're more likely to have to come across with a better marketing strategy, know the numbers, the margins. If I not necessarily have to be gyms, right? Could be, I don't know, a supplement, a new tool to do exercise, something for lose weight. The other day in broadcast, in previous interviews, one guy shared that he was doing a conference for a lot of cryptocurrency, a health guy, yeah, fitness instructor, doing a conference for a crypto wealthy people. And he said, okay, how much are you going to make? And let's say the people said 1 million. Okay, fine. Would you like to make 10x that, but you will have diabetes also? And nobody raised their hand. Do you want to have 10 times this money and have, a heart condition because so much fat in your blood, and you might have a heart attack, but you will have 10 times money? Raise your hand who wants that. And everybody was so quiet. He said there was
Right.
a big silence in the room. So yeah, there is priceless. It's a product. Nobody paying too much attention to the health and the fitness until something happens. And exactly, it's something that is aligned to your core value. However, investing is a different kind of animal altogether, because this is
Yep.
in a process that you is you're not changing your time for money. Your money can work for you.
Yep.
And of course, you want the biggest return with the lowest risk as possible. And tech, one of the out of the 500 millionaires that we interview in this podcast, 1 or 5 are property entrepreneurs, and the other ones are tech entrepreneurs, millionaires. So clearly, tech
Yep.
have a large chance, to good chance if the founders are good, if the product is good, a large chance to scale and have a big valuation. So Brandon, tell us what do you as an investor in tech space? We have a lot of startup founders that listen podcasts, some
Yeah.
of them from Silicon Valley with an amazing ideas. So what do you see in to invest in a tech company? Okay, what are you
Hmm.
expecting from the founder, and what would be your most important elements that you will look at?
One thing I look a lot is how founders see around corners. I like to use the example of Elon Musk, and it's an easy one to use because everybody knows Elon, right? But like, there's something about Elon, whether you like him or not. I know in at least in the U.S., he's been very involved in politics lately. However, the guy can see around corners. The guy knows what he's talking about. He's been able to turn around businesses. Effectively took over Twitter and cut 80% of the costs associated with it. And there's not a huge difference in Twitter's product anymore. Some people might argue with me about that. But what I like to look at, and I'll give you an example of one company I've had my eye on that we just invested in, Figma. They just IPO'd a few days ago in the US on the New York Stock Exchange. And it's actually a company that is a software graphic design company that competes with Adobe. A couple of years ago, the United States blocked it actually from being purchased by Adobe. So they stood on their own, and now they're their own company. They just IPO'd. They were expected to
Wow,
IPO for $33 per share, and they IPO'd for $85 per
wow,
share.
very
Yeah, and
impressive.
now they're exploding. Yeah, it's
Very
incredible. And so
impressive. Wow.
yeah, and the reason I think that that company and a lot of other companies are doing that is because of the real focus on that a lot of companies have. And I think that I hear different. I listen to a lot of other media, and I hear a lot of people kind of sleeping on AI, for lack of a better term. They're kind of just, hey, I think it's cool, but I don't think it's really going to change the world. And my opinion is that it already is. The companies that are even talking about AI have way higher market caps, have way higher evaluations than the companies that aren't. So I think that's for me, that's what I look at in any company, no matter what they do. Is there an eye for technology? Is there, capital expenditure budgeting for AI? Are they building part of their business, or are they ignoring it? So any company for me that has that being built out is a check mark. And Figma, I think, is something that everyone should look at. Again, I have decided to invest in it. I have to say that right. But I really think that companies that are focused on that, even smaller companies, are going to end up crushing it because that's where we're going. There's no way to look at it other ways, in my opinion. I mean, we're going that direction.
Biggest revolution or the new flavor of the day? I've been involved in tech, and I advise a lot of tech companies.
Yeah.
And before tech, first we start with the .com, then it comes the blockchain, then it came the metaverse, then it came the Web3, then it came the NFT. So there is
Hmm.
something always cryptocurrency. There is only, and now we have this AI, and I think that people are under the impression that this AI thing is the new flavor of the day in tech, and
Sure.
will be the same like the other ones. And my opinion is, I think this is a huge new revolution that we have like a massive impact, like the industrial revolution or that the other revolution. And I know because for me, I remember to write a business letter. English is not my first language. By now, you that create. I do a lot of grammar mistakes when I speak. So um, I remember it used to take me a week to write a business letter. If I need to write a letter to the lawyer, I have to write my own language. Then I have to translate it. Then I had to find a
Hmm.
friend that speaks English properly to read. Then I had to type it again. Then I need to put it in the email. Then I need to send it a week. And now How long it taking me? 2 minutes, and it's perfect. So amazing.
I
It's way
bet.
better what I even thought. So that can give you an idea, in my opinion, Brando, what a revolution. This thing that we can do for business, I'm shocked every time that I see what that thing can do and how much time can be optimized. And on the other hand, people say, well, the I'm not happy with AI because it will me out of my job. And what I'm
Sure.
thinking from the entrepreneurial point of view is that if the companies don't start to embrace AI and don't start to use it in the best of their ability to make it efficient, it's not going to be anybody because the whole company will collapse. It's not that we take your job,
Exactly.
we take the job of everybody. So,
Yeah.
Brandon, is it really AI a revolution or is a new flavor of the day? And what's your point of view? Is well, AI, I don't like it because it will my job. It will take my job away.
I definitely think it's to be direct. I mean, there's no, at least from what I've seen lately, in my businesses and then in clients' businesses that I see, it's definitely here to stay. It's not just going to disappear next year, because we wish it to, right? Now, what I will say about the whole jobs thing, because I hear that a lot, and yeah, I do think that certain jobs are going to be displaced, right? That's just inevitable. I was just talking on a show the other day to a gentleman that his audience is mostly translators, actually Spanish to English or French to English and vice versa, right? And so that type of job is going to be impacted tremendously. But I don't think, at least as of now, this technology is going to continue to develop very quickly, so that may change. But as of how it is right now, even from like lawyers and attorneys that this is also impacting, you still need them. You still need somebody to look at the, whatever the AI is spitting out and make sure that everything's correct because people's contracts are law, right? And if there's one error in that contract, then I really think that you're still liable for that, right? And so a lot of times what I tell people is I think it's just going to make people more efficient. So for example, like a contract attorney, I don't think their job is going to disappear. In fact, I think they're going to get a lot busier. And they're going to be able to take on a lot more work and service a lot more clients and probably make a shitload of money doing it, right? And so that's kind of my perspective. There are jobs I think that are probably going to disappear, and I think these are going to be able to be more efficient with their resources, meaning, a company that used to have a call center of 30 people may need a call center of 10. And I think those 10 people are going to be able to get paid really well. And I think they're going to have to know how to use AI effective. So if someone's listening and they think their job might be threatened by AI, I would challenge them to go learn how to use AI. Go learn how to use it, learn how it can help you be more efficient. Your boss next week and say, hey, I learned these three things and now I'm way more efficient. You can Susie over there because she thinks AI is stupid, but I'm learning about it and I can use it, right? So that's kind of my thought process.
Founders that don't listen, and they are stuck, right? I one of them. Yeah, we all been there. When we
Hmm.
start the company, every time that I see a founder say, look, you can do that, and they don't listen, I go with, I don't blame you. I was exactly like this. So I get you
Hmm.
100%, right? Because you started this business and you think that you're a big deal and you know everything and you design the product and then you make a little bit of money and then you're
Yep.
scaling up a little bit more and now you're making a little bit money, you reach 1 million, and all of a sudden you think that you're the big deal, that you know
Yep.
everything, right? And boy, did I get it wrong big time, yeah. So that ego, Brandon, sometimes get developed, and you the point somehow, especially when you see the first million, that you know that you're the deal, that you're the big boss, that everybody needs to do what you say, and then you arrive to this office with this persona that you're the big boss and everyone need to look at you. But the truth was that it was very exhausted because like
Yeah.
I started my business, I made the whole thing about myself. So to the point that I have 177 clients, they all want to speak with me, and
Right.
all the team, they also want to speak with me. And I'm thinking, these people are going to kill me. When am I going to sleep? Because they didn't care. The clients, as soon as I can speak with them, if they need to call me 2 a.m., 3 a.m., that's okay. Because we were renting property, so probably they need to leave early or they have a problem. And so I need to be solved by
Yeah.
me. And they knew there was someone in the organization, was Harry, the only one that can solve the problem.
Yep.
So I have to transition Brandon from this persona that I'm the big deal, I don't listen, everybody has to do what I say, to be more humble, to be to for because of self-preservation, to be more
Yeah.
humble, to delegate, to develop new leaders in the organization, to be coachable and lend someone like you with more experience up to me, Harry, you should be doing. I attended a mastermind and people was telling me the mastermind, Harry, you should be doing like this. And somehow I started to listen, and that change, Brandon, literally saved my life because I'm thinking that the business
Yeah.
literally will keep me. So we have been there. So it's difficult to face a challenge with the founder that that he's not listening, that he's listening, and that this ego can end up killing the company.
Yep.
And sometimes you feel hopeless, you feel sorry. You said it's incredible, they have a good product, and it's just shame that this good product we never see their own potential because that person doesn't want to give up that ego or that transition, what we told you, from 0 to 1, 0 to 2 to
Sure.
10 and whatever. So what can we do about it, Brando? Because it's very common, actually.
The first thing I try to do when I'm talking to a founder, particularly a founder that's kind of going through one of those transitions, is one, I try to figure out what do they like to do, what are they good at, and then what motivates them. And there's a lot of things that motivate people. A lot of people are motivated by money. Some people are motivated by the fame. There's a lot of entrepreneurs out there that could really give a damn if they make money, but they want to be like famous. They want to be known. They want people to care about them. And so I think if you figure out what that is, there's a lot of ways that you can take a founder and put them in a very specific role to help them still be in a role that makes them feel valued, but also does not get in the way of the rest of the team. So, like a good example is still a good friend of mine today. My business partner previously at the marketing firm, he was the face of the brand, really kind of what you were saying, Harry. He was the face of the brand. He built that business by himself on his name. He wrote books. He was on podcasts. He was on Fox News all the time. He really built that business, from the ground up, and people knew him, right? That's how we got clients. But what we were trying to transition to was, hey, how do we build this thing and scale it without you? Because you only have 24 hours in the day. And the less sleep you get, the meaner you are to the staff, man. So how do we figure that out? And he was luckily very easygoing about that. He knew that he was kind of in his own way. So we put him in a position where all he was responsible for is doing media. He got to go to speeches. He got to go talk to people. He got to go golfing with different people.
That's it.
He brought business into the gym, or I'm sorry, the
Wow.
gym. That's my other business. He brought business in the firm, and we sold it. We took care of the clients. We handled any complaints. We did everything else. That was only his job, right? So that's one way to look at it.
Mhm.
I think too, like I like to teach people through stories, especially when um, you've made those mistakes before and you know how much it can cost. Sometimes I ask, particularly younger entrepreneurs that are in their like, beginning stages, like, if money matters to you, what if I told you that if you keep going down this road, you could lose 300, 400,
There you
five
go.
hundred thousand dollars, and you may, ultimately end up killing your business because of the way you're acting.
Hmm.
Most of the time, while they might be shocked initially, they go, I don't think I want to lose $500,000. I think I'd like to learn more about how to not lose a half a
Hmm.
million dollars. So that's one way I do it too.
Like my cousin Brando, I have a cousin that used to have in UK a maintenance and building company. Okay, and he's calling me one day, Harry, you're gonna be very proud of me. Really? What are you doing? Look, my company man is doing amazing. I start as an employee, and now I am the boss, and everybody's working for me, and I'm doing so well that I'm saying no to clients. And the job that we're doing is so amazing. We have so many reviews that I
Hmm.
personally work along with my team and in every single project, and we have a great customer satisfaction, and we're telling the rest of the client we are so good. We're telling the rest of the client to wait to find somebody else. And I remember I told him, I said, look, number one, you never say no to clients. let's start, let's start for that
Right.
one. And number two, the more that you go and work hand to hand employees with your team in each project, the more you devalue in the company, because if how you gonna exit this if they don't know how to work without you?
Right.
And he's kind of confused. I said, wow, I know you're gonna be proud of me. I said, I'm proud of you, but then now you are in a different phase. You are in the scaling of phase, and I know the
Right.
0 to 1 or the whatever that you this process that you have done at the moment. um, is going okay, amazingly for you. Well done, 10 out of 10. But now you have a different problem that need a different skill set. You
Right.
cannot say no to
Right.
you cannot be dependent yourself of the company, because then I'll told him every day that you go on team, you devalue in your company, you devalue in yourself, and probably the company worth zero regardless the
Right.
profit or everything, because this team only work good. They say, no, they only work. I need to go because they only work amazing when I'm around. Otherwise, they don't perform. So, well, so, and
Yeah. That's dangerous.
what is it? It's a business, it's a job. What you creating here? So, scaling up, Brandon, like I said, the dynamic change a lot. I want to ask you a question
Sure.
about investing, Brandon. I have one theory, okay, that I think that if somebody, for example, reach from 0 to 1 and achieve the first million, okay, could be a good idea that they take some of the money that they are making in the company and diversifies an investment, let's say invest in a property or in other vehicles that, for example, if they buy a property with the
Hmm.
income the business is giving to the property is going to give it rent, well, they can use this rent for marketing. Guess what? If they go out of business because they are stubborn, they don't listen, they don't, at least they have that property that give them income. Right, and we see all the time that the people have a business, they're making money, they take all the money, put it back in the business, they're making more money, put the money, put it back in the business without knowing that the skill set from 0 to 1 to 2 will change completely from 2 to 10.
Yeah.
And then after they put everything they got and they reach to a 2 million, they don't know how to scale up. They continue staying in the business without bringing any help, without bringing people with the skills, and then all gone. And then you say, wow, so much work, and the thing
Yeah.
literally went to zero, and I have nothing, and I have to start all over again. In podcast on Unstoppable, if you hear the story that people share here, making millions, lose it, making millions, lose it, you see what's going on here.
Yeah.
So what what is what is your advice or take on this? If you have a company doing well, would you should take all the money and put it back into a company, or you will start to think in diversify in order to make more sustainable way?
Yeah, I mean, it probably depends on your situation a little bit. I mean, the way I look at it, at least for myself, me and my husband, we take pretty much every penny we make in our business ventures and we reinvest that into other ventures, right? So we're always looking at, can we get a property that, to your point, shoots off income for us later on and pays for something else? Can we, from our fitness studio, can we open another one that also cash flows? And helps us, provide, more income later to then put into the consulting company. So we kind of play that game. My husband has a 9 to 5. He's not an entrepreneur. That's just not his thing. And so we kind of live off that money. And then all of our entrepreneurial ventures, they make money, but that's really, at the end of the day, we reinvest that all into other ventures. So I'm a little bit more like what you're describing. I think that's a really smart thing to do. Now, not everybody can do that, right? Not everybody has,
Yeah,
a significant other maybe that
and you need
has
to know
enough
how to
money.
invest. That's the other thing,
Right.
Brandon, that being an entrepreneur, that's my next question. The fact that you're a good entrepreneur, that doesn't mean that you're a good investor, correct?
Correct. 100%. I mean, to be
You need to learn how to
totally
be a good
transparent.
investor, which is a completely different ball game altogether.
Oh yeah, and I think I mean we see this all the time, and if you talk to some of the ones out there, right, in business, they'll tell you this themselves. Particularly these younger entrepreneurs that make a ton of money because they had a really excellent idea. You usually look at their books over the next couple of years, and they lose a lot of money because they start throwing it into things that just aren't good investments, right? So to your point, I think I'm a big believer in experts around me. So I don't know everything about the stock market. There's a few things here and there that I call my financial advisor and I say, hey, that like, what do you think about that? I think that could be a good investment. But I personally have a financial advisor that handles my money. And, I know not everyone out there likes to do stuff like that, but I do really think you got to know what you don't know. That's a really big skill set for a lot of people. I'd like to think that's one of my best skill sets is knowing what I don't know. And experts, right? I call a lawyer or I call my accountant and I say, hey, how do I not have to pay for this at the end of the year? How can you own a tax strategy, right? So I think it's really important to use the people around you because people get in trouble when they start to just think that they know everything, right? If you think you've got your tax strategy down and you're not going to use a CPA, like, okay. And then at the end of the year, when you owe a ton of money, you're going to feel the same way the next year, right? So some people learn through pain. I'm just here to tell everybody I've had the pain before. So saving you some, you should just pay the money and get experts involved. But back to the, what we were talking about on the how to invest. I think sometimes there's probably a time in somebody's business, especially early on, where you got to reinvest most of the money into the business because you're growing that fast, right? So it just depends, I think, on, where you are. But what I really don't recommend entrepreneurs do, and I see this so much, particularly in small businesses like 0 to 2 million, is that someone makes a little bit of money, they've got a pretty healthy business, and they're financing their life with it. It's paying for their fancy cars, it's paying for their second home, it's paying for that wedding ring that they just got their wife, because they wanted to renew their vows. And then to your point, when times get tough, their business disappears and they no longer have the lifestyle that they created. So they either go bankrupt or they're just really unhappy people because they got used to this lifestyle that they can no longer sustain. So I always think you should put your money into ventures that will make you money, and you got to diversify at some point, particularly once you start making a little bit of money. Don't put it all in one basket because that can end pretty badly.
Brandon, if someone is in love with our conversation and want to know more about you, how people can find you, how this process works?
Yeah, so if you go to growsmartercgp.com, my company's name is Capital Growth Partners. You'll see me on the website. All you got to do is click learn more and you'll get connected with me immediately. We'll do a discovery call. We'll talk a little bit about your business and see if it's the right fit. My specialty is helping struggling businesses turn around and helping new entrepreneurs launch their business without making all the dumb mistakes that a lot of people do along the way. So you can find me again at growsmartercgp.com.
I love the name. The name is fantastic.
No, thank you. Try to keep it simple, man.
So thank you so much, Brandon. And for all of you that have been amazing, by the way, I think you're brilliant. Yeah. And thank you so much for the priceless content that you share with our audience. I really appreciate. And for all of you following the broadcast, see you in our next episode of Unstoppable, how brave entrepreneur like Brandon break that wall and achieve the first million. Bye for now.
Follow us for more interviews with world's most influential, audacious entrepreneurs that overcame challenges and adversity, providing you with the blueprint of how they sold their first million so you can grow your business exponentially.